Hello and welcome to IV Markets, and in this segment we're going to be going over a very brief tutorial on the charting section and how to set it up, which is probably one of the most important aspects of what we do in terms of our methodology. Now, the charting that we default to is a RENKO chart, and this is not proprietary to us. You could find this almost anywhere, but we like it because it's easy visually and it reduces a tremendous amount of price volatility that you will find with other types of charting. For example, if we look at a candlestick chart, it's a little harder to interpret and it has more volatility. So if we go to RENKO, these are called blocks. And a new block is formed every time a new price advances or declines. Okay, and that helps to remove a lot of the volatility. Now, just using RENKO by itself is not a great indicator. It's okay for trend following, and it's certainly much better than the candlesticks. But what we want to do is, and it's here, and we have a default, as an additional qualifier, we're using a volatility stop, or also known as an ATR stop. And essentially the ATR stop is the average true range. And the average true range looks at the open, high, low, close over a certain look back period, like a moving average, and then it applies a multiplier. And I'll show you exactly what that means and why that's important. Okay, so the first thing you want to do is, underneath the name of the stock, where it says V stop, you want to click that middle icon where it says format. The length, I like to default to 20. I think it's a good start, and the multiplier should be 3. So go to defaults and hit as save. Now, every new computer that you're using this site for, you will have to reset this because it has to memorize the cookies. Next, go to style, and you have these up and down bars. Bring these pretty close over to the right to make them bigger, and then instead of a cross, do a line, and then hit save as default again. Alright, so very simply, once the RENKO breaks above the red line, which is the stop, and forms a green line underneath, that is potentially a new buy signal. Alright. Conversely, the same for a sell. So GE broke the red blocks, RENKO, below the green and formed a red line above, and you would have stayed out of this position. Okay. Now, why do you use a multiplier? Multiplier is used in terms of setting your volatility. So if you had a 0 multiplier, it would be the price. See how the volatility stop, or the average true range, now is essentially the price of the RENKO. So I have found historically 3 to be a very good risk to reward multiplier. Don't drive yourself nuts, because trying to curve fit this, you're just going to get yourself in trouble. Now, before I let you go, let's just go back to Microsoft. Oh, wrong name. Now, all right, so the next thing, we're not going to get into momentum too much in this, but I just want to reference, on the right side is the momentum indicator, and it's 0 to 10. Obviously 10 being the strongest momentum and 0 being the weakest. What I like to do is, when there is a RENKO buy or sell, I like to also make sure that the momentum is stable or increasing. If it's a 0 to a 3, even if it breaks above the Renko, it's probably something that does not have strong performance or momentum currently. So we're going to talk about momentum in another video. So we're going to end it right here. If you have any questions, you're always welcome to hit the contact button and ask us. Thank you.